Good day and welcome to SCO BRICS Insight, where we talk about what's really going on in the world of the BRICS. Russia's experienced a surge in oil revenue. In May, revenues to the Russian treasury increased by almost 50%. The total volume of oil and gas revenues in the first 4 months of 2024 was approximately 416 trillion rubles, which is 46.8 billion at current exchange rates. Analysts cite that the main reasons for growth are threefold: an increase in world fuel prices, an increase in export volumes, and a decrease in competition. So where's the outlook for Russian oil exports? Russia's oil revenues have grown significantly. Furthermore, energy-related taxes have increased to 632 billion rubles, which is 7.2 billion, and these are from figures from the Russian Ministry of Finance. A recent Bloomberg report attributes the revenue growth to the increase in the price of Urals crude. The May taxes were based on the price of $74.98 per barrel, when a year ago the price was actually $58.63. So despite the price cap imposed by the G7 and the US, the discount on the mixture compared to the global benchmark of Brent oil has actually narrowed. The other sanctions have not caused serious harm either. Bloomberg reports that Moscow's adapted pretty well to these restrictions, including the European Union ban on Russian oil exports, by using a huge shadow fleet of tankers and selling its oil to its Asian customers. In the context of the monthly figures, May revenues to the oil and gas budget actually declined by 35%. This reduction, according to Bloomberg, was because of the mineral extraction tax. This tax is levied 4 times a year in March, April, July and October. Furthermore, the income received from Russian oil could have been higher had it not been for the subsidies that they give to the producers of gas or gasoline and diesel fuel. The Russian government paid 200 billion, which is about $23 billion, for supplies to the domestic market. Now, before I continue on about oil, I'd like to make an appeal. If you like and enjoy my videos, you can support me and help me fund the channel and my website, SCOBRICSInsight.com, by making a small donation. You can do this by clicking on the thanks button at the bottom right of the screen, and every person who donates gets a personal thank you message from me. Anyway, the demand for oil is attributed to the increase in Russia's market share and the challenges in oil production in the OPEC countries, particularly Saudi Arabia and Iran, who are both BRICS members, by the way. The total oil production in these countries in the first half of 2024 declined by 10%. Meanwhile, global oil consumption exceeds 100 million barrels per day and continues to grow. That's according to Alex Pastushkov, the CEO of ICS Consulting. In this context, prices are also rising. The price of Brent crude has recently been in the range of $80 to $90 per barrel. Now, the ruble price of an exported barrel was influenced by several factors simultaneously, according to Edward Kristianov, who's an analyst at Rosbank. He says in particular, OPEC Plus's efforts to reduce oil production last year not only stabilised oil prices, but created conditions for their strengthening. Geopolitical tensions in the Middle East and the Red Sea, etc., have contributed to the growth of oil price, the analyst adds. Also, last year saw a significant depreciation of the ruble, and it's worth noting that budget revenues in Russia are derived from the export price of oil, which is quoted in US dollars on the international market, despite Russian sales being denominated in rubles. If you take these factors together, they've led to the ruble price of oil rising by 50% over the year. Bloomberg reports from 4,550 rubles per barrel to 6,900. However, the increase in tax revenues is associated not only with the rise in oil prices, but also with changes in the current legislation. The additional payment of the mineral extraction tax on oil in the fourth quarter of 2023 helped. Now, the growth in revenue is also largely due to the low tax base of last year. In 2023, Russia was still working on its redistribution of its hydrocarbon supplies, which resulted in lower export volumes, according to Freedom Finance analyst Vladimir Chernov. The dynamics, he says, we see can be explained by the government's strategic approach to forming long-term mutually beneficial relations with new partners, plus a well-coordinated logistics chain. I mean, this was confirmed by Ina Litvinenko, who's a professor of economics at Moscow State University. The main revenues were the first results to become visible because of these changes, and also the economist believes that the continued growth of the economies of China and India, who are the main consumers of Russian oil and gas, are ready to act as both end buyers and intermediaries in the deliveries to the world market. I mean, these countries continue to purchase significant volumes of Russian oil, says Vitaly Kitachuk. In May 2024, Russia exported approximately 1.8 million barrels per day to China, which is 25% more than in May 2023. Now, as a result, the West attempts to reduce Russia's income from oil sales have not exactly achieved their desired outcome. I mean, Western sanctions have not been effective at all, certainly not the way they anticipated. I mean, the restrictions on Russian oil did lead to offering a discount, and that just made the product more attractive to buyers. So, however, the West's attempt to single out Russian oil and get it out of the market and to regulate its price was pretty unfeasible. I mean, you have to only look at the way that Venezuela and Iran have been through these sanctions, similar ones, and they were not possible to isolate them from the global oil market. I mean, Russia's actively using all bypass routes that the Venezuelans and the Iranians tested out. And we also must consider the shadow fleet of vessels that Russia has that are capable of concealing their owners, disabling their identification systems, and even temporarily changing their flags of allegiance. I believe that Russia has up to 130 such tankers. Also, there's the practice of mixing Russian oil with unsanctioned fuel in other ports in countries, which results in domestic product losing its jurisdiction and being sold under a different flag. For instance, following the introduction of the anti-Russian sanctions, Malaysia has increased its oil supplies to China. Now, this is despite the fact that Malaysia does not produce as much oil as it sells. So this indicates that Malaysia is involved in the trade of mixed oil. Similarly, Middle East countries such as the United Arab Emirates and Saudi Arabia have increased their purchases of oil from Russia. And it's unlikely that it will be for their own needs. Instead, they're probably purchasing it for resale. I mean, in contrast to sanctions, Russia is promoting a new anti-imperialist movement. I mean, this involves the countries of the global south gradually reorientating themselves towards new global centres of influence, such as the BRICS Plus and the Shanghai Cooperation Organization. As Alexei Pastukov says, this is not a quick process, but the erosion and the weakening of the US hegemony and the collective West, and that's becoming obvious to pretty much everybody. I mean, Kitachuk believes that the future state of affairs on the oil market will particularly depend on the global economic situation and the political environment. I mean, he also says that there's possible new sanctions and other levels of geopolitical instability could affect supplies and prices. I mean, there could be the introduction of further restrictions against Russia and try to limit its export. There's also technological and environmental trends that are actually going to play an important role. I mean, the transition to the renewable energy sources and the development of oil production technologies are also going to have an impact in the market. I mean, by 2025, it's expected that the share of renewable energy sources globally in consumption will reach about 15%, which is not that huge. I mean, the analysts also consider a number of factors in order to predict the number of potential scenarios for the Russian oil and gas revenue stream. The first scenario, he assumes that the current energy prices and export volumes will remain at their current levels. I mean, revenue growth is forecast to be in the region of 10 to 15%. I mean, if that's the case, revenue from oil and gas sales in 2024 are going to amount to about 9 trillion rubles, which is about $96 billion. In a positive scenario, the cost of fuel and supply volumes will increase and result in a 20 to 25% growth. This would bring Russia revenues of 10 to 11 trillion rubles, which is about $110 billion. Analyst also gives a negative forecast. Now, he assumes that if new sanctions are introduced or the demand for oil falls, there'll be a stagnation or a decline in income. I mean, that would result in the volume of revenue going down. I mean, in the first quarter of 2024, the volume of oil and gas revenues amounted to 2.928 trillion rubles, which is about $32 billion. I mean, in general, the budget for the current year estimates that it will be about $120 billion. It's possible that the budget for this year in Russia will end with a deficit, and that would result in the revenue of around 130 to 140 billion dollars. Meanwhile, according to Bloomberg, the Russian Finance Ministry has reduced its overall forecast for industry revenues in 2024. I mean, they anticipate it to be around 110, 120 billion dollars. I mean, Russia export oil, they reckon it's going to be about $65 a barrel this year for the revenue purposes, but it's going to be much higher. I mean, the average gas export price is set at $252.80 a thousand cubic meters, and that's 6% below the current forecast. I mean, at the same time, significant fluctuations in the world prices for benchmark grades will be compensated by the ruble exchange rate. I mean, there's no reason to expect significant changes in the discount of Urals oil. I mean, life in the new conditions is pretty much stabilised, and the current discount levels suit both the buyers and the sellers of oil. Now, thank you for watching, and please like and subscribe. If you've enjoyed this video, you can help me fund the channel and the website SCO BRICS Insight.com by clicking the thanks button on the screen. Thank you.